Welcome to The Real Build. I'm your host, Bill Ryman, your broker builder. And today I have a special guest coming all the way from San Diego, California. He is the president of Cornerstone First Mortgage and brings over 6 years of experience to his privately owned bank headquartered in San Diego. As president, he oversees the operations and production of over $2.1 billion in loans annually. He was born and raised in Bellevue, Washington, and obtained a bachelor's degree in business administration at Washington State University. Shortly after, he moved to San Diego, where he met his wife, Chelsea. Together, they have 2 daughters. In his free time, he enjoys training for triathlons and travel around the world with his family. The Mortgage Geek was created in 2015 to help educate the real estate community, which we'll get into. Sean Cahan, welcome to The Real Build. How you doing today, man?
Hey, thanks, man. Thanks for having me on. Doing amazing, doing great.
Glad to have you, man.
Yeah,
Glad to have you.
for sure.
Glad to dive in what you're doing. Obviously, you are a busy man these days because a lot of people are buying houses, and we're going to talk about that. So happy
Yeah, the
to have
market's
you on and
crazy.
get into it. What I always start with, obviously, talk about yourself, who you are, where you came from. Obviously, I brushed on it in the intro. So who is Sean Cahan?
Cool. Well, I hope we have enough time because I can talk about myself for a while.
It's
No, I'm
all
just
good. There you
joking.
go. Love it.
um, yeah. So, man, I'm just kind of I'm a guy from Washington State University or Washington State, then went to Wazoo, and then came down to California on vacation. I never left. So that's essentially who I was originally. Fell in love with the beach and went directly to door-to-door sales of like perfume because I was so broke that I didn't even have enough to buy like a $200 mattress. So I literally slept on the carpet for the first 2 months of my new house. And then got into mortgages, not knowing shit actually, and just I would just say like who I am, always have been. So I started my first company when I was 17 years old. It's just
Nice.
like who I am in a nutshell is I love to have fun. I love to be around other people, but I'm not the smartest dude in the room, but I will just work harder than anybody. I just don't stop. I'm like a machine. So that's really who I am. So about anything that I do, I will always. So I just started getting into like racing cars and, very involved. So I'm going out to the track a lot, really working on my time. People are like, man, what are you doing in your spare time? Well, hanging out with my kids and driving cars because I'm trying to get into it. So anything that I do, I try to like do it the best as I possibly can. And then I'll make a decision if I want to continue or not. So
I love that, man. Yeah, I'm very similar. Just may not be the smartest person, but I'll outwork somebody else in my profession. That's what I love doing too. Is just it's a drive too, and your drive obviously speaks for itself. And you saying also no experience in mortgages, but you built a company like you have to $2.1 billion in revenue, which is impressive. What you do at 17? What was the business at 17 that
I
you
started
started?
selling, that was back in the day when like car parts, lowering your whip, like on, the Jetta, the
Yeah, yeah.
Honda, that's when like the Civic EX came out, and then we put,
Fast and
exhaust
the
on those
Furious
things.
back in the day. Yeah.
Oh my God. I'm like, I still love Fast and the Furious.
Oh
So
yeah.
I'm not, like I said, I'm not the smartest cat in the room always. So like my favorite movies are like Fast and the Furious, Bad Boys, Hot Tub Time Machine, anything sophisticated I don't watch. But uh yeah, so that's why I just started seeing all these people, and I was like, wait a second, I can make money by doing this because I know all the people buying it. So hold on. So I went over and just started making deals like all like the local motorsports shops, going like, hey, I'll bring clients to you, but I need a 25 or 30% spread on the difference. I'll bring them in here. And I had to use somebody else's name because I wasn't 18 yet on the business license. And I literally just kind of weaseled my way in between, and then started selling like motorsports. And people were like, man, what drove you to do that? And I was like, I have no idea. Money, maybe. I wanted some new Jordans. And so yeah, that was it.
Awesome, man. Yeah, it's I mean, it's a grind. It's figuring stuff out as you're growing up too. I mean, I was the same way. I don't even know, man. I've sold so many, like just getting into sales and selling so many random things too throughout my life. And then I sold cars at one point too at 20 years old, and had a lot of success doing that too. But when you're a salesperson like yourself, you have a gift. I always think too, there's kind of one or two people, you either can sell stuff or you can't. You can go to all
100%.
the different courses you want and try and learn, but you're a salesperson. You're kind of born that way, in my opinion.
Yeah, I agree. So like in the mortgage crash, I was a broker at the time, and so I still well, I wasn't the actual broker of record, my partner was, but I was the main salesperson, So, hey man, they were rough, and so I was like, well, I gotta feed up time. I got a fiance right now, and I gotta figure out something to do. So I started doing it, but then I went and sold lumber with my dad. And like you were saying, like salesman, like you know how to sell. It doesn't matter what the fucking product is,
Yeah.
you just know how to sell, right? So I don't know anything about lumber, okay? Even though I grew up around it here in my first year, in the only year I was there, I sold $2 million of wood products. And my dad's like, how did you do that? You don't even know how to even like spell the specifications yet. Every single time you place like a purchase order, we have to come in and like correct it. And I was like, man, dad, I'm just a people person, just a people person. So that was it.
That's the difference, man. Yeah. I mean, you're either a people person, you got the confidence, and you can sell anything. That's the thing. It's
100%.
it's a gift too. Let's go into what you're doing now. Obviously, I
Yeah,
mean,
for sure.
why choose mortgages? Why be a loan officer? How'd you get into that? What was your reasoning between, you could have done something else? Why this profession?
Um, I didn't choose this profession. This profession chose me.
There you
So I just sent out resumes and somebody picked me up and said, do you know anything about mortgages? And I said, I don't know shit, but I will, like I said, I'll just work harder than everybody here. My third month, I made $50,000, and I was like, and I broke the company record, and they were like, you should train people. I'm like, I'm not going to train anyone. I don't even know what I'm selling yet. So it was more that the mortgage industry found me, and why I stayed in is because when I find something, I think that any like good salesman does this, right? When you find something that you're good at selling, and then your brain starts to remember all of the little teeny, then um, uh, the guidelines for it, like, and you really start to get involved in what you're selling, then you bring a lot of education to the table. And so when you start bringing education to the table, that's when more and more people will start following you, right?
go.
So it's like becoming a good salesman, learning all the intricacies of the actual industry, becoming education, educating others, and then people just follow you. And so that's why where my career was, I was a LO, then I went into a branch manager, and then I had the opportunity to buy part of a bank, or 50% of the bank. And so that's what I did, a small local bank. But so I stayed in the industry just because I remember everything because I love it so much, right? And so like I try to like, I don't go to a lot of people and ask them questions. I'll go and try to figure it out, because the human brain, if I go and figure it out compared to just listening to somebody, I'll remember it. I'll retain the information more. So, but like 6 years ago, I literally just started reading underwriting guideline books, and my brain would just started remembering. So when a client will call, I would just know the fucking answer, and I could educate them with facts, right? So like laws, what law works, when does it work, when did it come out? And I sell based upon facts, right? So like if I go into a room with 5 other loan officers, I'm going to nail that client because I'm going to tell them laws, I'm going to tell them facts, I'm going to tell them guideline, I'm going to tell them the actual like guideline number. And then the client's going to go like, well, okay, obviously I'm going to go with this guy compared to somebody else going like, well, I mean, my underwriter did say at one time, and it kind of makes you, I always say, it makes you look like a sardine in a can of sardines, I don't want to be a fucking sardine.
It's impressive. I mean, I get 100% what you're saying too, because you put in the legwork. You got the knowledge. You do the research. You learn from firsthand experience, which I'm big on that too. I go back to when I sold cars. I had no idea what the hell I was doing with cars. I didn't even know the product, the brands, anything. but I wanted to be the best at that dealership. I've said this story in the past. So what did I do? At the time, nothing, there wasn't really much on a computer. I mean, we had internet stuff, but they still had car brochures, and I took every brochure out of the brochure room, took it home, studied every single detail about every car on that lot, and wrote it down in memory, just kept using what I wrote down. And then over time, boom, learned it, knew every single little thing about those cars. And I was their top salesman month after month after month, and put a lot of money in my pocket at 20 years old. But unfortunately, I didn't know how to handle that money at 20 years old.
Yeah, right. It's called
So
blowing it.
yeah. So that went quick, but long story short, it's same as you, man. It's you have a passion for what you do, and even just growing up and doing other things like the car parts, like you said, you learned it, you knew what you were selling, you did the legwork, because most people get into a profession, and I mean, especially what you're doing, there's so many pieces to it. And they're
Yeah.
just kind of like you said, they're like, well, this person said this, you want to sign up with me and I'll get you, they don't have the knowledge like you, but that's where you're a step ahead. I do it with building, I in real estate, because they both relate. I know how a house is built from the ground up. Not
Yeah.
not your typical realtor does that. Most typical realtors, isn't this a nice size room? How's the furniture look? Me, I'm like, look at this. The exterior is built like this. These cabinets are built like this. A drawer, so it's just that knowledge.
Yeah. I mean, 100%. I was actually speaking with a referral partner of mine, and she, I'm not gonna say any, like, I don't want anyone to remember this, but I was like, how did you end up double ending the deal? And he's like, Sean, I when the client came up to me and I was leaving the open house, I opened the door back up and I went in there and I opened up all the blinds instead of just saying that I've closed it down. And I was like, holy shit, really? I was like, so we get into like those things can happen. So instead of like going and becoming more educated and finding out like all the specifications of the house, like I was expecting to be like, oh my gosh, he felt really comfortable with me because like I know the house in and out. I know the plumbing, how it was like, the light fixtures, the quartz, the cabinets, how it's going to last long because it was a new build, when it was built, all these types of things. You know what I mean? So I was expecting this big, huge story. And then it was like, I opened up the door and let him in. And I was like, fuck. All right. This kind of backfired on me, And so I think that a lot of people in sales get a couple lucky shots and then all of a sudden they ride that wave, right? And instead of using that and going like, wow, I'm going to go and learn more information, because I believe that the human brain wants to be lazy, right? We don't want to test our brain that often. So if we can get into a pattern of being lazy and still accomplishing the goals that we set, we really can never, then we'll get to a plateau. Some people in the sales are like, oh my God, well, I've been here for 20 years and I sell 30 cars a year. And it's like, well, why don't you sell 60 cars a year?
Mhm.
Look at your fucking database,
Mhm.
And I think that it's because we become lazy in our mind, because we think about our mind, right? We always wanted to be lazy. Like if we can find a cheaper way, like instead of reading a book, why do we have Cliff Notes? It's because we want to be lazy, right? Want to do everything a little bit faster if we can, and not to do as much homework in our brain working. So, that one person just might not going out and, like you said, going and getting all the specifics of that, of those automobiles and really reselling it and going and really kind of putting a lot of boots on the ground and calling our past clients and reselling and why they should do something else and why they should sell that house and get into another house. I think that we just become lazy and we kind of float through. So that's why a lot of people shine and a lot of people get really plateaued for a long time.
Yeah, well said. I mean, because it's like even with real estate too. People sell a couple deals and then they don't follow up. They don't call their leads. They don't, they just say, this person will call me when they're ready to buy a house. Then that person ends up buying with another realtor that did call them, and it's just, it's, and especially in real estate too. I mean, well, in your profession too. I mean, there's so many people, especially now, signing, getting their mortgage license or getting their real estate license and just going into it because their friend tells them how much money they're making. But then they think they're
Totally.
going to make money overnight and they get into it and they end up spending more money than they're actually making on licensing and all this kind of stuff and MLS fees and dues. And it adds up. And it's like, wow, yeah, this wasn't like it was chalked up to be. Well, you didn't put in any legwork, and things don't happen overnight unless you put in that legwork. So it's just it's so common. It's unfortunate.
Yeah. I grew up, my dad's a pretty wicked salesman, still to this day. Like, he'll never stop, actually. It's pretty awesome. He's in his late 70s and he'll never quit, actually, his job. And he always taught me, like, never look at a phone and expect that thing to ring.
Yeah.
Never. You got to make that phone ring. And if you make that phone ring, that's how you become successful. Right. So, yeah, to kind of parlay in what you were saying about people entering the market, there's a lot of new people entering the market. So here's an example. I had another loan officer that started and I gave him 2,000 leads. And I was like, here you go. Call these people. Right. And I was like, hey, in the near future, I'm going to get a dialer for you. So it'll be easier. A week later, I was like, hey, how's it called? He's like, oh, I haven't called anyone. I was like, well, why not? And he said, well, I haven't, you told me that there's going to be a dialer so that they can dial like 10, calls at the same time. So I was waiting for the dialer to get fixed or created. And I was like, wait, you didn't call anyone? And I literally just picked up my phone and I was like, you have one of these. This is how you fucking call people. I don't care if you dial it one by one. You don't need a dialer to make it even easier for you. Like, you wasted a whole entire week not calling people. Wild.
Yeah.
Wild.
And that's unfortunately that's how majority of people are. That's and these businesses too. I mean, even on the building end, there's a lot of people getting in construction, people that even in home building and in Florida, it's not easy. It's not an easy thing, and it takes a lot of work, a lot of patience with customers because some of our projects take 2 years. I mean, it's
Yeah.
just there's just so much work that goes into it. Then you got these guys coming in that really don't have a clue. They're book smart instead of field smart. That's another thing. And they just think they're going to get in and make a ton of money and not have to deal with anything or anybody. But when you're in a relationship with a customer, you're in a relationship for a long term.
Oh,
It's
yeah.
not just the warranty. It's continuously after the warranty that you want them to keep calling you because they're going to refer you. There's some business,
100%.
there's business right there.
Sphere of influence is like the cheapest referral source that we just literally don't tap into. And when
Mm-hmm.
you start to tap into it, then you start to realize how powerful a sphere of influence is. And I think that there's a coach out there, Brian Buffini, always teaches that as well. It's just like, focus on your sphere of influence first, right? Like, going out and go getting a new customer is 5 times harder than just going and getting a customer from your current database. I mean, call them. It's like, so I have this system called HomeBot, and I just merged with they merged underneath me. I'm very fortunate to have some trusty people, but they came over. They're a large outfit. They do they'll probably do like $800 million this year. And I showed them some of the softwares that I have, and it's sent out a blast to the email to their past clients, and they're like, holy shit, I cannot believe how many deals I'm getting right now. All I did was just send this system is so great. I'm like, yeah, the system is really good, but all I really did was force you on paper to reach out to your past clients. That's it. And so it's like, holy shit, that's so powerful. Your past clients, like, you get so many deals from them in any business. You can sell cars, you can sell real estate, you can do mortgages, whatever it is, just reach out, because if they close a transaction, they had a really good time with you. Well, next time that they do it, they probably just want to hear from you. Right.
Hmm.
And then the other thing is that maybe I always say every successful closing, you get 5 referrals over a lifetime. So if I've done 3,000 transactions, well, then I also, now I get to get 15,000 transactions over my lifetime. And if I do an additional 12,000 transactions, then, hey, man, I'm going to be the happiest man on the planet. So I'll be pretty excited about that.
Yeah, I mean, for those of you listening, it's just follow up. I mean, that's the thing. It's preached upon, and it's sales 101 too. Follow up, maintain the relationships with your clients as much as possible too. Don't just sell them on something and say, "All right, goodbye, thanks for the cash," because unfortunately, that's what a lot of people do too. So it's crazy to me. But what you're saying is money right there. Um, so let's talk about obviously what you're doing, because obviously this show is directed towards kind of showing people what to look for in real estate industries, construction. You're a big part of my industry personally, especially now. Interest rates still low, people still getting loans on even on construction builds and so on. We're doing some bigger houses that people are loaning the whole entire projects.
Yeah.
What So let's talk about first, like, how would a customer go about getting a loan? I mean, it's common sense to some people, but for those people that don't know, briefly touch on that, and let's then talk about the kind of typical loans you're doing personally.
Yeah, no, for sure. Um, Hey, if anyone does want to get a loan, then I would just, reach out to your local lender, or I am licensed in 35 states. My Cornerstone's licensed in 38, 45 here in 3 weeks. But so like if you are looking out, we could be more than happy to help you. You normally start with like a phone call, get to know the person that you're gonna be working with at least for like a couple minutes. Don't go into detail, because that person, if a loan officer starts spitting off like all the different interest rates and the different programs and they don't have anything on you, that person is pure only about sales, you know what I mean? And they're probably just selling, the interest rate that they have. They probably are not like super knowledgeable about what they're doing, because they're trying to sell you out of the gate. I always say like, hey, nice to meet you. Here's who I am. Complete the application so I get your personal information. So number one step, do the application, fill it out to the best of your knowledge. All it is your personal information. Um, and then kind of start asking the questions like, what's my down payment? What are the minimum down payments? Set your goals. Like, a lot of people come in and go, what am I pre-approved for? And I'm like, well, hold on here real quick. 1 second. I'm going to gather your data. Then you're going to tell me what you're comfortable with. Then let's come together as a team and create a pre-approval, right?
Mhm.
So if we do it that way, I'm not just looking at a machine and going like, well, you approved for $2 million. And they're like, what? I only wanted to go to 600. I'm like, okay, well, cool. Let's scale back a little bit, right? Or, hey, you're only approved for 300,000. What? I want to go to 1 million, and I had 700 grand to put down. I'm like, oh, well, I didn't get that information, Um, so that application supporting docs does not mean I'm going to come up with this magic number, because your monthly outgoes, it differs between people no matter what your actual income is, right? And what your assets are. Just because you send me over $1 million of assets, or $200,000 in assets, or $10,000 in asset, I don't know how much of that amount of money that you want to spend, or if you want to spend any, right? So
Mhm.
doing that basic information and giving the actual person the supporting data, to then have the conversation about what you feel comfortable with. I always say, don't look at the market. Don't look at, the trend. Oh my gosh, I have to buy because of interest rates. Okay. Don't buy because of something that's out of your control. Never, ever do that. Like, I've bought in a lot of real estate. Right now, the market is skyrocketing. People are like, holy shit, I can't believe that people are paying this amount for houses. Why would you ever buy? I want to wait for a dip. And then I just closed on a house 2 days ago. Right. Well, because I don't care what the market's doing. I don't buy because of the interest rate. I buy because of the asset and the payment. And whatever situation comes at that time, that's what I'm going to be using. Like, I don't know if the market's going to go up or go down. I don't know if the interest rates are going to go up or go down. But the amount at the time, the interest rate compared to like what I paid in my down payment, that payment for the next 30 years, I'm very comfortable with. And that's what I'm basing off. Now, in the future, if the interest rates come down again and I can better my situation, cool, right on. Or if the house goes up in value, that's fucking rad. Cool. Do I want to sell it? I don't know. But too many people today, I get calls every single day going, hey, what am I pre-approved for? What's the max? And, do you think that the market's going to go up? Or do you think the rates are going to come down? Should I hold off? And I'm like, hold off for what reason? Right? Like, you're really holding off for something that like you have zero control over. Nothing. So I just say strike whenever you are ready, not the market.
Yeah, I love that because it is true. I mean, everybody that goes into it, like you just said, is there. That's the first question: what interest rate can I get? Okay, you got to apply. Let me figure that out. Give me an application. I'm not just going to throw you out a number to string you
Yeah.
along to get your deal. So I like that and what you're doing because you're upfront with them. You're being honest, and then from there, it's like, okay, where do you think the market is going to go? Where do you think, we all have our predictions. I'm in the building world. I'm seeing, the material shortages, stuff like that starting to take shape and form, and lumber prices through the roof. Obviously, that's going to price people out of certain building, and that's how it works usually. And if the market goes down, then people will get priced back in, so on. So if you can't afford a house, don't build it right now and then wait till, material cost, everything becomes a little more affordable. Just got to be patient. So what you're saying is huge as far as, market conditions and everything too. What about typical loans you're doing? How does somebody know where to go as far as a loan? What kind of loan should I get? Is that how much cash they have to put down? Is that what are kind of, how do you judge that?
Cool. So here's a really the different type of products that I do all products. So Cornerstone is a direct seller for agency. So that means that we service our own agency conventional product. And then also we have our own jumbo product as well. So we got the whole slew. That's the advantage of like a mortgage bank over an institutional, is that I got everybody's product all within under my one house, right? So if this one bank has a portfolio or portfolio like a doctor program, and I sell to them on the capital market side and I'm delegated underwrite for them, or even non-delegate, but I'm the one funding bank, I now have their product and I have their product and I actually underwrite their products and I fund it and then I sell it to them later on, So that's one of the advantages. But most of the products that we're selling right now is your base conventional. And then also your government programs, your FHA, your VA is a very popular program as well. I would say that the main indicators on which product you're going to go with is down payment and credit score. Okay. Down payment, credit score. So let's say that you are dead set on going on conventional product because you have 3.5 or 3% down or 5% down, but you have like, a lower credit score, like a 660. Well, geez, an FHA loan, even though it has mortgage and monthly mortgage insurance, because of the type of loan it is, it will actually yield a better interest rate and mortgage insurance on the factor rate than a conventional, because it's government, and government is not so finicky about credit score, right? So like same down payment, credit score is driving you to go over to an FHA product because your actual monthly payment will be lower. Also, people get really scared still to this day of mortgage insurance.
Mm-hmm.
I talk to a lot of parents, and they're like, I do not want my kid to have mortgage insurance. They need to wait till they have 20% down. I'm like, why? Why would you wait? You know what I mean? A millennial saving 20% in this day and age, if they make $100,000, you better believe it, they are spending that $100,000. Okay. Us millennials, we are jamming. I mean, we are moving, we're shaking, we're trying to use every single thing as a cash machine, and the 20% will never get there. How do we build wealth? Well, we build wealth by taking what down payment that we do have, put it onto an asset, but we are really good at making the monthly payment. So continue making the monthly payment. In 5 to 10 years, that monthly payment turns into the equity. Now our net worth has increased. People get scared of mortgage insurance, but you have to remember in 1998, there was a law that was passed called the HPA, the Homeowners Protection Act, to say that the mortgage insurance will be released no matter what. Is based upon the purchase price or appraised value at the time of closing. And once you get to 78%, then that mortgage insurance is removed. So if the housing market goes, woo, right, and people are scared of it, the mortgage insurance still is going to go, woo, it's going to come off. Okay. Keep making that payment. So you don't, and the mortgage insurance with like a high credit score is so low these days because there's so much competition, right? They're not like, I always call them like the big bad brothers back in like, 2008, 9, 10, when they had their own set of guidelines because they took on all the risk, right? The mortgage insurance is there to take on the risk. So fun fact, right? I'm going to throw this out there real quick and I'll see if you know it as well. Okay. Would a bank rather loan to somebody, when people are like, I got a big down payment, would a bank rather loan to somebody with 5% down or 20% down? And why?
I'd probably say 5% down because obviously that's the loan amount that the bank's giving is going to be higher, or obviously they're going to have to loan more money and then the bank's going to get more interest on that money. Correct?
Okay. So we do get a little bit more interest on the money, but the reason why is because there's a mortgage insurance, and on 5% down, the coverage is greater than your actual the 80%, right? So when you do a 5% down, you actually have 30% coverage. So the actual risk to the bank is lower on a 5% down than a 20% down loan.
Huh.
So that's why most people are like, oh, I don't want mortgage insurance. I'm like, wait, I want to give you that loan. I have insurance more than if you brought in 20%. That is actually the most risky, okay, of most of them because we don't have any coverage and it's the least amount of equity that we have to work with, because anything above that, I have more coverage. So like a 5% or 15% down, right? 85%. I have 12% coverage on that. So it's better than actually putting down 20%.
Wow.
Yeah. So that's why people should not be scared about mortgage insurance. And when I break down those facts, right, how it's good to have the mortgage insurance is there and it protects everybody involved, like the lender. So, the mortgage insurance goes away. It's also reducing. It's a factor rate. It's not going to stay there, and it'll decrease after 10 years as well if you're in it for a long time, or here's the amount of time that you're in it and you can always pay it off sooner. That's when it starts to break down the actual scare of getting into a homeowner or into a home instead of just trying to sit there and save 20% down in this crazy market.
See, then that's the difference maker with you compared to, I mean, I deal with a lot of mortgage loan officers constantly too, but you're actually willing to take the time to explain these things too. What you just said is huge because everybody does fear mortgage insurance. It's not such a fear. It's like, I don't want that. I have to pay more. That's the main thing right there is, how do I get rid of that? Oh, 20% down. I can get rid of it. And then I don't have to pay that extra on the insurance that's going to nowhere. That's kind of the argument with it. And that's just everybody's mindset towards it. So what you said was
100%.
huge.
Yeah. So I will say, like, I have 100% conversion on somebody that comes in that's scared of mortgage insurance and doesn't want to apply for a loan will apply for a loan and be out in the streets, because I'm like, you are waiting. So you're going to just pay a landlord then for the next 4 years? Like, you're talking about throwing away money. Let's talk about how much money that you're throwing away in the next 4 years just because you don't want to pay mortgage insurance of $160 a month. But damn it, you are totally willing to pay that person over there $2 G's every single month that you get a place that they get to kick you out of.
It's well, yeah. Once again, spot on too. Which I don't understand that aspect of it too. How somebody would rather rent than that's a whole nother topic, and we can get into it too. Why somebody? I mean, I understand if credit issues are there and so on, they can't get a mortgage. Then okay, your only option is a rental. But there is people that would rather rent for reasons like you said, but the rental is either higher or the same as what it would be for them to have a mortgage and own their own place. So that never made sense to me. I mean, good for the landlords. They're making
Yeah.
money. They own it. They're making more, it's tax reason. Obviously, there's so many factors into it. So good. People are always going to rent, but some people don't have to rent, but they do. And I still never understood that. But maybe you
They're
do more
just
than I.
and they're not uneducated people. They're uneducated about homeownership,
Yeah.
because here's another thing. A typical loan officer, and I'm not bashing out loans, I'm saying that we as a organization and we as an industry do not educate our loan officers based upon facts. What we do is tell them to pick up the telephone and to sell a rate or to
Yeah.
sell something, right? We don't listen to the consumer. We don't teach them enough, right? And so that's why there's more lawsuits. Like, I use a special program. Good shout out to my bud Dave Savage, and a mortgage coach. I mean, it's brilliant, and he created a software that I use, and our whole bank actually is now implemented to start using it. But they it shows the reamortization. On a refinance, it talks about like what are the actual savings. Should we be paying points or no points? Like there's a lot of media, no points, no points, no closing costs, and you should never pay for all that kind of stuff. But and then they get a slightly higher interest rate, and they don't understand. We're not educating the consumer enough, where we're not educating our loan officers enough who are on the actual streets and doing all those front facing conversations. So what I'm doing at Cornerstone, and why we're expanding so far right now, is I am a loan officer. So last year I did 519 transactions for 243 million while I actually ran and operated Cornerstone. Okay. So I am in the same battlefields that you guys are at the same time. But the reason also why I'm doing is because I'm educating my branch managers and I'm educating my loan officers on the conversations that I'm having and teaching them more. So when they're in front of their clients, they're less likely to lose the clients, because we're not just selling an interest rate. Yeah, we give awesome rates. It's just part of the package. But I want to educate the consumer, because when they walk out of the closing, they're like, damn, I'm with the right company because of the education piece.
Yeah, no, I love that. And so let's go into that a little bit too in your education too. Like how obviously I know how you are. You've explained that as far as, going above and beyond, really educating the customer, which is rare too. I mean, not just worrying about the sale. Obviously, you're going to get the sale because it with all the education you're giving is important too. How are you doing that throughout your company with so many employees? How are you training them the same way to keep them in line where it's just not pick up the phone, sell a rate, and if they don't take it, hang up, call the next.
Pure psychopath.
Love it.
Complete fucking crazy person that will work 15 hours a day and still have a smile on their face. No, no, that is true. If you ask anyone at Cornerstone, I am extremely involved in their business. I never will stop working, and I never will stop helping individuals. So, loan officers, branch managers, underwriters, LOAs, processors, everyone across the board has me at all times, because I always think that you can accomplish a lot of things when you're proactive, and you can also accomplish a lot of things when you know exactly the question or exactly what needs to be trained, instead of like this floofy bullshit, right? So I can sit on the phone and literally talk about nothing for 1 hour. I can truly do it. I also can get on the phone and educate somebody and it's a stepping stone. I don't try to blast them with every single income thing on the planet all in one day. It's like a year, 2 years, 3 year education, right? So it's like, okay, here's a really good income thing, and let's parlay that. Let's go that into another part of the income, and then another part of the income, and another part of the income. So, but they're very pieced out, and it's in small little bites, right? So it's a long progress. That's why a lot of people have been with me for a long time, and or expecting to be with me for a long time, because of the education piece. um but I'm constantly trying to teach and trying to train individuals on all the actual specifics of a mortgage, not just so much like of the act of the interest rate. So it takes a long time, but it's a lot of hours to do it. So that's how I do it, is I do it in little teeny bite sizes, so that every single person actually gets the fulfillment of education, right? But they're not learning too much, and I'm not throwing too much at their brain for them to memorize at one time.
Makes
So I broke
sense
it down.
too,
Yeah.
which is, yeah, definitely the right strategy to do too. One thing you're doing too is educating obviously your customers, which I've seen online too with your brand, the Mortgage Geek.
Yeah.
You started that. I love it. You're doing educational videos. I watched a few of them too. Uh, let's start here, and then I'll go into some questions too because I saw
Okay.
one of your videos. Why the Mortgage Geek? Why'd you start that? Obviously, everybody listening, definitely go check it out, because if you got questions with mortgages, this man right here is probably answered every single question you can imagine, with all your content you're putting out. But why that brand? Why that persona? How'd that start?
So I was on radio, and somebody just said, "Hey man, you're so smart. You're like a mortgage geek." So then I did one commercial, and I was like, "I'm the mortgage geek." And then I never used it again. And then in 2017 or 2016, I partnered up with a studio. And I was like, "Oh my gosh, hey, this industry's finally getting out of the dinosaur age, the T-Rex age, and we're going to start doing some fun stuff." So I was watching a lot of media. So I went into marketing, and then on the way to film my first video, my assistant at the time was like, "Oh my gosh, like Mortgage Geek, we put on some glasses." And she was like, "Here, wear my glasses." And I was like, "This is a great idea." And so we were at the studio, we put on the glasses, and then she was like, "Hey, hold on real quick. This is really cool because the geek, and we literally took a piece of white paper, cut it, wrapped it around, and then put some scotch tape over the top of it. And then I was like, and then she was like, "Put it on." So I wore someone else's glasses that were actually like meant for like reading. So I was like, my eyes were all messed up. And it was literally just a piece of paper in between. And that's no joke how the Mortgage Geek started.
That's awesome.
It
Yeah.
was just, there was no business plan. It was, we need to start educating people. And as you can tell, I got a lot of energy. I mean, shit, it is 4 o'clock, and, and I'm like, like always. I love it.
I'm jealous, man. I wish I had your energy. At 4 o'clock, I'm having my Starbucks for that afternoon pick me up.
For sure. I don't need Starbucks, but I do love Starbucks. Even like, I go to Cloud 900, but and so that's how the Mortgage Geek started. But it was all about education, and also I always say find your strengths and outsource your weaknesses. My weakness, still to this day, is remembering to call my past clients and remembering to call the agents. Okay. So what I did was, when I created the Mortgage Geek, that is now my strength, because I'm really good at marketing. And so that ties me to my consumers, that ties me to my past clients, and that ties me to my real estate partners, so that they remember who I am through my actual marketing criteria. So I needed to create something to overcome my weakness, and that's how it really started. And then education. So I think education is everything. That's why I started a coaching program as well. But um, then and then I just play with a lot of different stuff. So as you can see, like over the years of the Mortgage Geek, and I think between all platforms, I actually just broke like 6 or 7 million views. It's purely from the education piece, and more people are getting tied, to the education piece of it. And then I throw in a lot of fun shit too. But that's
No,
how the Mortgage Geek was created.
yeah, no, I love it. Yeah, I mean, what you did too, me and you you can relate to a lot. That's one of my weaknesses too, is I'm so all over the place. Sometimes I forget to call the customer too. I do a ton of content, marketing, stuff like that. I haven't formed the building geek yet, but you know, maybe that's something that's coming in the future. But I've obviously have my brand and so on too. But what you're doing is so smart because you are giving information to your clients and you're answering the questions without having to contact them for them to ask you those questions. They can just go to your platforms and everything's there. It's all laid out and you're answering stuff that people wouldn't even think about either. And that's just your knowledge in general. I mean, you say you're not the smartest person in the room. I think you're pretty damn smart. So because
Thanks, man.
to cover the stuff that you're covering too, and the knowledge that you have and taking the time and reading and learning the stuff that you have too. I mean, that takes smarts to do it, because not a lot of people are willing to put in the time or have the patience to do it too. So props to you on that. Give you a lot of credit. One of your videos though too, I was watching, you were talking about refinancing because you kind of touched on refis too. So let's get back into kind of the education aspect of it. You were saying, sometimes a refi is good or bad. A lot of people are refinancing these days because their obviously interest rates are lower. So when is the right time to refinance? Just brush on this a little bit. Is there a bad time? Because in the top of mind, people are like, oh, I got equity. I'm going to probably refinance and, pull out some money and pay off some credit cards. So,
Yeah, so that's actually a really good point. So there's no real right time and there's not a wrong time really to refinance. It's all about your goals, right? And so if you actually just talk to a normal consumer, their goal is, oh, I want to refinance. Well, why? Because I want to lower my payment. Well, cool. Well, I can definitely do that, but I don't know if you totally understand what that's going to do. So like, fun fact, 8 years in your mortgage on a 30-year mortgage, the first 8 years, it's just a tad bit over 40% of all the interest that's due for the whole 30 years. Okay.
uh,
So when somebody comes to me after 8 years of being in their mortgage, which is very common, okay, not everyone has just, been in a habitual refinance, like, constantly doing it. They will come to me and, hey, I want to refinance and I'm going to lower my rate 0.5%. This sounds great. My payment's going down $500. And I'm like, well, the payment's going down $500 because all I'm doing is I'm just re-extending your loan back out 30 years. So let's actually look at how much interest that you're going to be paying
yeah.
to really see the benefit of it. And when I tell them that, they go, whoa, wait a second. I don't want to do that because I'm technically paying more. And I'm like, aha, exactly. So I think 9.5 years, if you don't lower it, and if you're going back into a 30-year from a 30-year, if you lower your interest rate 1.25 or less, then you're actually going to pay more interest and actually extend it out. So like the old theory of, well, I've always been told that if I'm dropping to 1%, I always should refinance. I'm like, no, that's incorrect too. How I figured this out was I literally just pulled off amortization schedules and I started I got TI-83 calculator and I bring it everywhere with me. It's in my briefcase. TI-83 plus, always use it. Makes you smart and I love it to death. It's like high school math, but
Yeah.
I just started like trying to figure this stuff out because I was like, I got to figure out these break-even points because when I'm telling a consumer when to refinance or not to refinance, I better know exactly. So every single situation is slightly different, but essentially if you've been in your mortgage for 10 years and you're not dropping more than 1.25, never go back to a 30-year. Or if you are dropping 1.25, just know you will literally pay the same amount of interest. Your payment's just going to be lower because I'm re-extending you out 30 years again.
Hmm.
So they go, oh, but my payment's less, but I pay more. I'm like, exactly. So if you're going to take that savings of $500, what are you going to do with it? Are you just going to put it in your bank and say, I got $500 more? Well, then I don't want you to do the refi. If you're going to say, I'm going to take that $500 and I'm working with a financial advisor and I'm going to take that, I'm going to put it into the market. So I'm paying the same amount of interest that I was. Now I've freed up $500 to go put it into a compounding interest, like a liquid fund, then oh my gosh, that can be actually a really smart idea. So that's something. So I go one step farther. It's not about the actual $500. It's what are we doing with it? How much of effect is it going to take? What are the amount of the cost? Are we actually rolling in the cost, not rolling in the cost? So there's a lot of things. So when people kind of get in touch with me about a refinance, they're going to get their earful of a lot more information rather than just lowering their payment.
Yeah, and that's the problem once again is majority of people, oh, you want to refinance? All right, let's do it. Here's the new rates. I can get you locked in at this. Boom, sales done. What you're doing is you're extending on that and saying, listen, if you do this, you're going to pay more in interest over time. That's stupid. Why would you do that when you can just you're 9 years in, whatever. It's the information and people don't know this stuff, and that's what's so I mean what you're doing is that's what makes you stand out. It's huge, man. Like,
Yeah. And not everyone wants a refinance. Like I actually talk quite a few people out of a refinance because I said, I will not do your refinance because your goal is to save interest and you're not saving interest. Right.
yeah.
So if you are willing to do a 20-year or a 15-year because you've been in your mortgage so long, I would be more than happy to. But I don't feel comfortable putting you into a mortgage when you tell me what your goals are and I'm not achieving it. It's only look like I'm actually saving you money, but I'm actually not. So I am very firm. A deal won't change my life ever, right? One deal, 5 deals will never change my life. One negative client, that will change my life. One
Mhm.
person that I fuck over will change my life.
Mhm.
So I got to look out for them. And in turn, it looks out for me, right? So if I focus on everyone else's well being, in the end, I will then also win. But
Yeah.
if I only look out for myself, I will not win.
Mhm.
And so that's the reason why I got so detailed in that stuff is because I got to look out for everybody else and the shit will come back to me, I promise. And
Oh
it's
yeah.
kind of like where I'm at now, right? Why so many people. So I think by the end of the year, I'll have over 50 branches. And it's a lot of people just going like, I want to work for somebody like that. I want to work with somebody that's like always going above and beyond for everyone else. And then, and not just looking at myself.
Yeah, it always wins in the end. I mean, it's a short term versus a long term perspective too. I mean, you're playing the long term game. The long term always wins. I mean, these short terms they're going to be out the door, especially when things slow down. I say with building too, all the time on our building, and I mean, there's so many people coming out of the woodworks now because construction's going nuts. And it's
Yeah.
like, how can I make quick money, screw people over, and then they're gone in 2 years? And I even try and educate people. I had a phone call today. Guy was way out, he could not afford to build with us. I still took the time to try and, he asked me questions. I could have just said, hey, good luck to you. See you later. No, I took the time because you never know. In the future, he might come back when he can't afford to build with us and build
100%.
build a luxury home. He's going to remember that I took the time, that 15 minutes out of my day or 10 minutes out of my day, to help educate him on, okay, if you're going to go this direction, red flag. If this builder says they're this much a square foot, run the other way because you're probably going to be the one to get burnt. Somebody is in the back end. Cheaper isn't better. And I try and educate people as much as possible, just like you with what you're doing with the mortgage geek, because that's what wins over time. You're going to win over time because you care. That's the difference.
Yeah. Care. How
You have a
funny.
conscience.
It's such a simple word, right? That most people are just like, "Whoop,"
Yeah.
right? Because we're in the world right now of like glam, and Instagram and Facebook and like show off and blow cash and we're like me type of situation, and I'm watching it get carried across. It's wild. Even like those builders, like why are they coming in right now? They're taking the time. It's very lucrative. They can build something. They can fucking jam after 2 years because they know that they cut every single corner on the
Hmm.
planet. You know what I mean?
Yeah.
And they have no intentions of having any type of warranty base or whatever. I mean, they're going to try to scoot around. They'll probably get screwed. They'll probably screw a lot of people over, and it's just wild that
Hmm.
how many times that I'm seeing that, even on the builder side. Like new people come in. That's why using an old established builder is so much more powerful, or using somebody that really does care and extend warranty, or what happens after my house is built and 2 years later. Do you have a process like that? I want to see that. So that's pretty cool that you already do that.
Yeah, we even like I always tell people too, we're all about long term. Your warranty's 1 year with us, but even after the fact too, we're gonna be that kind of concierge to where if you need something, call us. If it's something, and I've been good with people too, if it's something that should have not have happened, I take care of it. You
Yeah.
know, if it's 5 years down the road and I had this situation, I've told this story in the past. Drywall screw was sticking, through. There's a PVC, or there's a pipe that was loose that was supposed to be attached to the stud. Well, my plumber didn't attach it 5 years ago. It was just dangling behind the toilet. Every time the toilet would flush, pipe would vibrate. Go figure. There's a drywall screw that was punched in sitting right there. Well, over
Yeah.
time, boom, big water line break. We took care of it. We didn't have to. We could have said, well, you're 5 years in this house. It could have been this, this, and this. No, good customer, very good client of ours. Took care of them. Didn't have to do it. Guys referred us multiple times, even since. So it's doing the right thing, man. It's like you just said, care about your customer, actually have a conscience too. And I mean, even in your business, there's so many people getting into it, even in real estate with all the realtors, flooding the market. You know how many people right now, because they know real estate's on fire. Hey man, thinking about getting my real estate license.
Yeah.
You got any tips? I mean, I'm sure you hear that constantly too. And it's like, yeah, work your ass off. It took me 10 years. I've been a licensed broker now for 10 years in real estate altogether. And I go, it's taken me a while to get to where I am, but it's just busting my ass. I want to be recommended, but I'm doing the stuff you got to do to get ahead, just like yourself. It's not going to happen overnight.
No.
It's not like they all say, just go to your sphere of influence and then Aunt Tammy's gonna, buy a house from you, and then you're gonna get a referral from her, and it's just money's gonna start pouring down. You know what I mean? It's like it's crazy.
Yeah. 100%.
But one thing, getting towards the end here, because we've been going, just one more thing before I get into some personal questions, education wise.
Yeah.
Closing cost, obviously a huge thing to buyers and sellers, fear of theirs. Let's discuss this. Is there a way around closing costs? What are they? How are they determined? I get this question all the time.
Yeah, great. So, all right.
I
So on a refinance.
think I lost your mic again.
Oh, can you hear me now?
Yeah. Yep.
Okay. So on a refinance, essentially closing costs are fixed. Okay. So depending upon your loan size, but and in geographic area, like your title, your escrow, or if you don't have title, your attorney, or you always have title. I mean, your escrow, your attorney, your state, whatever, those are all fixed costs. If somebody says that there's no closing costs, what they're doing is they're giving you a higher rate to offset that interest rate by paying the closing costs, because the closing costs still exist. Okay. There's no such thing as a no closing cost. Now on a purchase, again, on a purchase contract, there's always fees, right? So even if you look at it, it's like, oh, it's a 50-50 split, which is a very common one on a purchase contract. Then your 50% is what the lender sends to you. The lender does not send you the whole amount and then say, oh, well, the seller's going to pay for this amount of it. That is your 50%, right? Typically. Now, again, here's a thing that I always live by and tell everyone. There's always an exception to every rule. But we have to create a rule to make the exception. If everything was an exception, then we really wouldn't have a rule. So what I always speak about is the rule. And then some people are like, oh, well, this didn't happen with mine. Well, cool. That's an exception. So sorry about that. The closing costs. So like on an average, $200,000-$300,000 closing costs, you're probably going to spend about like $2,500 on a refinance. Okay. Those are your fixed costs. Now, anything above that, or 3,000, right around there, depending on what the lender charges. Okay. There's a small variance. Anything above that is typically just points, right? So points drives down your rate because you're paying prepaid interest to get a lower rate. And then if you don't want to pay points, then pay a higher rate. So the bank says, hey, if you pay a higher rate for a longer period of time, I win. If you want to pay points, it's like, hey, I'm going to prepay the interest up front. I'm going to give you a little boost, but I'm going to give you a lower interest rate. So over the time it's lower. That's it. So those are like the pretty much the same. What's interesting about like the loan estimate itself on the closing cost is that it includes your prepaid. So don't get sticker shock at the actual number that says this is your closing cost. And it's like in, 25 black font, bold, underlitten, like with spotlights on it every single time. It's like your closing costs are like $15,000 on an FHA loan. And people are like, this is crazy. I'm so scared. Look to the right of it. Okay. Look to the right of it where it's like in like 8 font that's like grayed out that you can't read, because fixed closing costs. So there's 3 different parts of a closing cost, right? There's your fixed cost. Okay. Those are the third party fees. The prepaids, that's prepaid interest, prepaid taxes, and also interest. Okay. Prepaid interest. So that's not actually a third party fee. This just goes along with owning a home, right? Property taxes never go away. Homeowners insurance never goes away. And interest while you have a loan never goes away. Okay. That's not a fee, but it's included in that bulk. Now, if you're doing a government loan, FHA loan, or doing a VA loan, that if you're not eligible for it to be removed, that is part of that, but that's called a finance fee, and it's rolled on top of your loan amount. So yes, it's in here as your total cost, but it's not like you have to come out of pocket. Here's another rule that I live by. On a purchase, have a thought process. You have to come in with the cash. On a refinance thought process, you can most of the time roll it in. That is the difference. A lot of refinance people forget about that. They come and they say, oh my God, I didn't know I was having to come out of pocket. Yes, purchase out of pocket, refinance, normally not. And that's a really easy way to determine like which one you're going to come out of pocket.
I'm learning every time, learning more and more with you, man. I'd probably keep you on for another hour if I wanted to with all the questions I got, but I know you're a busy man. But no, if anybody wants to hear more, they can easily go check out more information, obviously, on all your social media sites, which we'll get to that too. Last thing too, before I get into personal questions too.
Yes, sir.
The dreaded question you always get is, where do you see the mortgage rates? Where do you see the market going as a professional? What do you think?
The crystal ball says that homeowners will be able to get a mortgage.
Perfect.
Man, I don't have a fucking idea.
Yeah.
There is a lot of inflation. We printed a bunch of cash. And are they expecting interest rates to increase? They were. But the last like 3 days, we've gained back like 75, and now they're saying that we're going to break like into the next tier. And the 2% coupon right now is starting to look like there's maybe some money coming back into the 2% coupon. And if that happens, then the interest rates might be going back in the 2.25 to 2.5 range again. So, and this was something that like literally, I think last week, everyone's like, those days are over. And now it's like, no, they're coming back. So if you're ever trying to shop or search for a specific interest rate in order to make something, work for you personally, and you've run over all the numbers, well, then just sit back and if it happens, it happens. And if it doesn't, then it doesn't. If the trend continues to go right now over the next, couple more days, and we got really good 3 days in a row, well, then, hey, jump on it. Here's where most people fail, is that they're not in a position to actually take advantage of it. They don't put themselves into a position. They call 10 people and they say, what's your rate? Oh, it's not what I wanted. Then they call the next person. I got to offer this. And it's like, no, you didn't. Why didn't you? If you did, you would have taken it, right? What's your rate? What's your rate? So they go to so many people, they go online, what's your rate, rate. And then what happens is that interest rate comes into the market, like let's say a week later, right? And then they start calling around again. What's your rate again? What's your rate? What's your rate? And then by the time, and then they choose somebody because they have the lowest rate. So they've wasted a couple days. Now they do their application. Now they send over the supporting documentation, and now the interest rate goes away. And then they get mad at the loan officer or the bank because they didn't lock the rate. And it's like, holy shit, I know I'm drinking from a fire hose right now, but in all the water I didn't catch. So consumers, Stop just calling around and put yourself into a position. Pick somebody that you like. Pick somebody that you think that has your best interest in mind. There's no such thing as the bottom. There's always someone that's going to be cheaper. There's always going to be someone that's going to be more expensive. It's all about actually how much time too. Because like I've been in situations where a client left me because of $2,000, but then their transaction took 5 months. So the amount of interest that they paid over that 5 months that they're re-amortizing was way more than that $2,000. So they actually lost money by going with a guy for $2,000 savings, right? And so um, I think that the interest rates right now are kind of creeping back and they're lowering right now. So they're kind of creeping back into like that 2.5 range, which would be super cool, or 2.75%. If it happens, I would say put yourself into a position that if it happens, you can lock the loan, get your application, submit your paperwork, do about an hour of work. Who cares? Because that 1 hour work can turn into thousands and thousands of dollars of savings.
Boom. Heard it from the best right there. Yeah, I love that. Great answer. I mean, it's true though. Like it happens with everybody. It happens in every business. So I get it constantly too, where everybody shops around. They shop different builder. I mean, everybody's so fixated on cost, price, this and that, and then in the end, it ends up biting them in the ass because it's just like, come on, you want quality, you want it's on my field, you want quality, you want good construction, you want a relationship that's going to last. Go with us. If not, you want a builder your house is going to fall apart, you'll never hear from them again. Go that direction.
Yeah.
It's crazy.
Um, my wife and I just closed on a new home for ourselves, and I found the house. This goes to show you. So like everyone says that the market's at the peak, right? And so I'm buying. And I had no idea what the interest rate was going to be, but I want to say, you guys, look at this. I found the home that I like, and in that time period, I somehow got the lowest interest rate that bank ever. It was lower than what I can give from my own bank free. I was just in the right position. I felt really comfortable. So I started going with him. The guy called me. He's like, "Do you want to lock?" I looked at it. I was like, "Holy shit, that's crazy." So I locked it. Now people are like, "How did you get that?" And I'm like, I was in the position and the market came down and I made a decision and I moved on, but I didn't shop around. I didn't call 10 different people. So that just goes to show, like, was I lucky? Absolutely. Was I the smartest plan? Not at all. I was good with the rate that they offered me in the beginning. And then I just put myself into a position to succeed. So I think consumers need to do that more often.
Yeah, stop dragging your feet. And moral of the story there, stop dragging your feet. Just do what feels right to you and just move forward. If you're ready to buy a house, buy a house. Stop waiting, because the longer you wait, the worse it's going to get. I
100%.
mean, it's never, you never know when it's going to be the perfect time. If we can, like you said, the crystal ball predict the future, we'd all be loaded and we'd all be rich and we'd all be, living it, and they're just rates nothing would matter.
Yeah.
So, so
I'd be
anyway,
literally a billionaire if I had a
yeah,
crystal ball, and I'd be
exactly.
skateboarding.
Yeah, there you go. There you go. Sean, it's been awesome, man.
Yeah.
Quick personal questions, real
Yes,
quick
sir.
before you leave. I ask these to everybody. What about you personally? What lessons have you learned throughout your journey that we should all apply to our own businesses or our own lives that can help us grow?
Slow down. Just slow down. That was the biggest thing that COVID taught me, and I love it. Um, just value what's happening in your current life and not always looking forward. Okay.
Mm.
Looking forward is very powerful, but just kind of slow down, value the things around you, because now you become more successful because you can make different pivots and different moves instead of making everything like a knee jerk reaction. And that's helped. Actually, I think COVID has helped me so much more than I ever could think. That sometimes I actually, and I'm not saying this because of, a lot of people passed away and I feel bad, and it has nothing to do about that. I'm saying what I always try to look at the best of everything that I do. And even during those shit times, and then like my wife lost a restaurant, it sucked, right? I look at that and I go, wow, that thing was so powerful that I actually almost liked what happened to me during that time. And so it made me slow down, spend more time, realize what I have, and then I can move forward.
Love it, man. Love it. Yeah, it's one thing for a lot of people too. Obviously, it's an unfortunate time, but I think a lot of people, there is going to be good that comes out of bad. There always is, obviously, and especially in business too, and especially during those times we all had to pivot, no matter where we are or what situation, and it's all how people reacted and did different things. I love your answer though too. Because I mean, it was a time to kind of reflect and be like, okay, what next? What do I need to do to get ahead and keep my company rolling, help my family, provide for them too? So I
Yep.
love that, man. Another question I always ask about your past. What about your future? So where will we see Sean in 10, 5, 10, 15 years from now? Who will he be?
I'm gonna be the same dude in the same outfit. Maybe like just one more tattoo, and hopefully, I'm praying that it works. That I have one more kid. So, and
You got two girls. You probably want that boy, huh? I'm sure.
no, I want to be a girl dad all the
Oh, do
way.
you?
I want a third girl. Yeah,
There you go.
man, look at me. I don't want another one of me. That shit's crazy. No, boys or girls. I am a girl dad and I love it to death. But have another boy, I just want another kid. I just want a third and love my wife, love my family, love having little kids around. So if I can get one more, that'd be freaking awesome. And 10 years, I'm still going to be running Cornerstone. I can guarantee I'll still be wearing the same outfit. So I literally wear, if I'm not in a suit, I wear the same outfit. White V-neck, chino pants, and some, regular shoes. So, and then I hope to, have a lot of branches and a lot of people surrounding me so that we're just constantly educating people. I don't ever plan on leaving this industry. I don't know what I would actually do.
Nice, man. No, this has been awesome. I can tell you're definitely, I have no doubt you're going to definitely be there. Like just your passion, and the way you're trying to you're doing it for good. You're trying to help people and not just sell people. That's the difference maker too with you. I can tell. So props to you, man. No doubt that
Thanks, homeboy.
you're going to be very, very successful in your business too and help a lot of people. So, another thing real quick, obviously last question, what the show's all about. What exactly do people need to look for when getting a mortgage or hiring a loan officer, and why should they choose Sean Cahan as their loan officer of choice?
I always say the number one thing that you should look at is their knowledge of the industry and the actual facts. So that is why I want you to use me, call me. I promise you, I answer the questions because most of the questions are, have an answer that is a fact, right?
Mm-hmm.
Or a direction. And I will find that direction, or I'll find the fact to support whatever information that you're looking for. And I spend a lot of, even though I do a lot of transactions, I have a lot on my plate. People say, oh my gosh, you must be so busy. I'm not busy. Call me, I answer, I text, I help. And there's enough time how I've structured my day to help as many people that want to call me.
No, man, yeah, that's the most important part of it too. So it's just you're answering people, you're taking care of them, and that's what matters too in every business. It's what you're doing is huge, and like I said, I give you a lot of props for it, and no doubt that you're going to have a lot of continued success with what you're doing as well. So, last thing, where can people find, connect, hire you, sign up with you, get a mortgage with you, refi with you? Where can they find Sean?
I mean, you can always find me everywhere. So if you just search the Mortgage Geek, I actually have that trademark, the Mortgage Geek. So I hold the trademark for the Mortgage Geek. So if you ever like Instagram, Facebook, YouTube, the Mortgage Geek, call my cell. You can ping me however. You can slide into my DMs. You can text message me. My cell phone is on the whole world. Or you can actually just put into your Google Sean Cahan, and I will be the first page. There's a lot of different like articles, and I was lucky enough to be one of the top candidates to be followed in 2021 by Yahoo Finance actually last month. So that was pretty powerful. So
Nice.
yeah, my information is very easy. Just don't forget Sean Cahan, or what's even easier, the Mortgage Geek, and you will find me everywhere. So yeah,
All this
sometimes I
stuff,
dress
yeah.
in a wig.
Yeah, there you go. I mean, any questions you guys have, go check Sean's stuff out for sure. I mean, that's been awesome, man. I really appreciate you coming on today, brother. It's been, ton of good information. Like I said, I can probably keep you here for 2 hours, but you are a busy man. And I know you gotta go tend to a lot of customers right now because this market's nuts. So I do appreciate you coming on today.
Yeah, thanks, Bill. Appreciate you. What a wicked podcast, and I appreciate it. And hopefully, we'll continue to stay in touch.
Yeah,
That'd be
for
rad.
sure, man. And as always, guys, thank you for listening. Like, comment, share this podcast. 5 stars only on my reviews because that's all I accept. And I will see you guys on the next episode.